Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, yesterday, as widely expected, the RBA held interest rates at 1.5% and giving no clear policy guidance to the market. The central bank, although gave little encouragement either to suggest any rate hikes to 2018. The RBA Governor Philip Lowe did continue to strike an upbeat tone on the state of the local economy, but warned that wage growth and inflation are likely to stay low for a while. My view for the Australian dollar still remains bearish, and I still hold to a target of 76.50 to 77.20. With the current uptick at the moment, I view resistance from 78.65 as a short-term cap, and overall I expect to see further weakness to emerge towards 77.90 to 77.85 and reassess from there. Overnight, the US dollar remains unchanged and still holds around the 93 handle. Overall, we still need a sustainable break at 93.40, as this would in turn provide the upward passage to the target of 96 to 97 as an objective. At the moment, the support holds at 116.85 for the euro, and at present I expect to see any advances to fail towards 117.80-90. Now, a break beneath 116.85 would give further exposure to the downside and bring in a target of 116.30-35 and reassess from there. Well, the dollar-yen case for the fourth time has failed at that 113 handle. I still overall view the market will decline, as the indicators are supporting this view towards 112.25, but I feel the market may actually look towards 111.60 before any reversal. Any advances towards 113 should still fail. So my strategy for dollar yen is still to buy on dips, but not at 112.25, as this level, as I mentioned, may give way towards 111.60. The market is slightly long since the recent surge that we had over the last couple of weeks, so I expect this pullback to eventually emerge. The pound is still lacking momentum, even though Mark Carney, the Governor of the Bank of England, gave the clearest sign as of yet of an interest rate rise being imminent. Carney warned of reckless household borrowing in an interview last Friday, telling the BBC that interest rates could rise in the relatively near term. With my target being reached at 132.60, I am a little bit cautious and not coming out with any bearish call, even though we could see a further slide to the downside. The reason behind that is we could easily see a snap towards the 133 region if Mark Carney starts talking about any potential rate hike, which could lead on towards 135. So I feel the market is near a bottom, but to try and ascertain where is slightly tricky, but at the moment 131.95 is viewed as support. Well, gold, as I mentioned yesterday, showing some divergence, and I'm not a bear at this level. I feel the market could easily stage a recovery to 78 to 83 as the base holds at 68. Now, overnight, in the news wires, North Korea promises to bring a nuclear cloud to Japan and mocks the PM as a headless chicken. And as the United Nations General Assembly, when the leader urged UN members to force North Korea to end its nuclear and missile program. If the geopolitical risks do heighten again, then I do expect to see gold to recover. And I'm not a bear at these levels, and we could easily see a rise up towards, as I mentioned, to 83 and reassess from there. The silver outlook is slightly picking up, with the support holding at 35. The downtrend comes in at $16.80-90. Now, a break above that would give further scope towards the upside and bring in a target of $17.40. I'm not a bear at these levels, and you can see as this decline has come through that bullish divergence is showing on the RSI. Therefore, I expect to see a recovery and probably a base now between 16.15 and 16.35, and look towards that downtrend at 16.80-90. And to wrap up with oil, I still view the market can actually fall further towards a 49.45 support, with resistance now seen at 51.50.60. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you have a wonderful day that's ahead of you.